You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. It's 1/4/22. That means it's time for Mickey Fulp's monthly major market review. We got an important announcement for you at the end, so stay tuned. Mickey, Happy New Year. Happy 2022. Looking at these sheets, at our spreadsheet, it's a pretty interesting year, as well as a pretty interesting month for December. Stock markets, I'm beginning to believe what the millennials think, that stock markets only go up.
Yeah, I'm not there yet, obviously. Yeah, 2021, I think we're all happy that it is over. Really, the only thing that's shown all year, well, a couple of things, but the U.S. markets. And the Fed keeps building a bubble. As we know, all bubbles eventually burst. We just don't have any idea when this one will. The U.S. markets set records again last week, but they sold off on Thursday and Friday, Friday being the end of the year, New Year's Eve. Let's go through the numbers. Dow closed at 36,338. Up nearly 5.5% on the month and 18.7% on the year. Fourth year in a row that the major markets have returned positive results. S&P 500, 4766, up nearly 4.5% on the month, nearly 27% on the year. Nasdaq closed at 15,645, did not have a good month, only up 0.7%, but it was up nearly 21.5% on the year. All these markets got knocked down on Thursday and Friday with year-end tax loss selling, year-end book squaring, and no doubt some profit taking involved in that. Russell 2000 lagged all year, although had a very good month, closed at 2245, up 2.1%. But it was only up 13.7% on the year. Only, Kerry.
Only.
Yes.
Very jaded. Only.
And the VIX was about average for most of the month, had a couple of volatile days, but as we look back on the VIX over the course of this year, it generally dropped. You know, we were at all-time record highs for the VIX throughout most of 2020. So a lot less volatility in 2021.
Yeah, less volatility, and the large cap stocks, S&P, Dow, and to a lesser extent the Nasdaq, which of course is dominated by the large tech companies, all were the performers, whereas the Russell 2000 was a laggard, where it really, I guess, in prior years had been up there with the broader indices.
And that's always of concern because it's a small business that really moves in the U.S. U.S. economy is still teetering on the totter. Going on to the other markets, the Toronto Stock Exchange, the big board up there, was strong. In some ways, it almost tracked oil and commodity metals prices during the course of the year, not surprising there. Still had a strong year. Closed at 21,223, up 2.7% on the month, 21.7% on the year. So did quite well. Toronto Venture Exchange, it hit a multi-year high back on February 19th of 1,099. And it was downhill from there, flattened out, bottomed in a late summer doldrum season into September. Had a bit of a run up from mid-October to mid-November. Then here came a brutal tax loss selling season. It bottomed on December 14th. Our prediction year after year is December 15th, plus or minus 2 or 3 trading days. So we hit that right on. And it rallied a bit over the course of the last couple of weeks, but bear in mind Canadian markets were closed a full 3 days during that period of time over the holidays. Closed at 939, flat on the month, up 7% on the year. Big down story over the year, and the reddest of the red on our board was the emerging market index, closed at 1232. That was up less than 1% on the month, but in the red in the quarter and the half, and over the year lost 4.7%. And really this underperformance has all to do with economic problems, energy problems in Eastern Asia.
Okay, so now we look at our money rates here, and it was a really good year for the dollar, that's for sure, and conversely a bad one for the euro.
It certainly was. Dollar had a very strong year, but it was weak over the last week, closed at 95.66, down 0.7% on the month, but up 6.4% on the quarter. The euro, just the opposite, closed at 113.8. Up on the month, down on the other 3 quarters, down 6.9% on the year. A lot of that has to do with ongoing draconian to fascist lockdowns in European economies. 10-year Treasury up all year long, up 62% on the year, but let's realize where it started. 0.94% interest rate on the 10-year bond, closed at 1.52. That's also up 6% on the month. But as we look over the last 4 months, it's been hovering somewhere in that plus or minus 1.5% range. We'll see what the Fed does going forward. Powell threatening to do 3 interest rate rises in 2022. I do not know how the economy can stand that. And finally, Bitcoin, SOS. Most people know what that means. Wild moves up and down 19% on the month to 46,214, up 33% on the half, up nearly 60% on the year. Who knows?
Yeah, well,
I don't.
You said SOS. I was thinking SOL for the quarter anyway, or I should say for the month. But there's still a lot of believers out there, Mickey, and a lot of large institutions are hopping on this bandwagon, whether that's the sign of a peak or the sign of a transition to the next phase. I guess we'll find out more as the year progresses. And
if the hedge funds are piling in, you're pretty sure they're going to be wrong.
Okay. Well, they haven't done too well as of late, the funds, for sure.
As of late, how about over the last decade or 15 years, Kerry?
Yeah, well, certain ones, certainly the majority of them, but they keep moving along, although we did see a few major hedge funds close their doors during the year, so that could be a portent of things to come for sure. So getting into the metals, well, a very negative year for them, even if the month was up a bit, but not a great year for precious metals.
Precious metals had a brutal year. Gold had its worst year since 2015, down 3.6%. But as normal during this time of year, this is a seasonal uptrend for gold. It had a very nice month, closed up 3.1% to 1830. Silver closed the year at 2330, up 2% on the month, but down 11.5% on the year. Platinum also up on the month to 963. That's a 2.9%, but it lost 9% on the year. My bad, I predicted platinum would be the best performing precious metal of the year. It was the second best performing behind gold, and they both lost. And the big loser, as predicted at the beginning of the year, was palladium. It closed at 1845. Now, that's up 10% on the month, but down a whopping 21% on the year. It went exponential. Of course, it went parabolic. Big story in metal space over the year were the industrial metals led by copper. No surprise there. Huge positive moves. It set its all-time high of $4.75 per pound back in mid-October, closed the year at $4.43. This is generally rarefied territory for copper. That's up almost 2% on the month and almost 26% on the year. But there's a story behind this story. These metal commodities set records across the board, all or most of the industrial metals over the course of the year, specifically in Q3. But the story behind the story is really the inflated inputs into costs of production, including energy and labor. We had supply disruptions, severe shipping problems, the rise in natural resources, in fact, commodities of all sorts, hard and soft, is really an inflation story.
Exactly.
We'll see where that goes going forward.
Exactly.
We've talked before that inflation's not ending. It's not transitory.
Yeah, that's a pretty good guess there. Pretty likely scenario. Well, talk about the inflation play, looking at energy prices here. I mean, across the board, all four that we follow were up substantially.
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
This is true, and lots of black on the board here for the oils across the board, across the year. WTI up 13.7% on the month, 55% on the year. Brent closed at 79.20, up 12% on the month, 53% on the year. Henry Hub had a bad month. It closed at 373, down 18%, and it was actually down 36% on the quarter, but a lot of that had to do with a very warm November and December, so demand in the U.S. was going down. That said, it was still up 47% on the year. We've talked before about LNG, and this is a European and Eastern Asia story with LNG shipments going across both ponds to be delivered from the U.S. at record high prices, soaring prices. And then there was uranium, which was down 7% on the month to 42.25. But there's a story behind that, too, and that's the Sprott Physical Uranium Trust. created from the takeover of Uranium Participation Corp, which is a fund that holds physical uranium. They accumulated 42 million pounds of uranium beginning in August. They essentially removed excess market inventory, and the price responded wholeheartedly, up 31% on the month, up nearly 40% on the year. And they were not the only entities that have begun hoarding uranium. Lots of producing and development companies hoarding uranium, other funds, Yellow Cake, the Kazakhs selling into that fund. So it's really served to take nearly 1/3 of annual supply off the market. And of course, when you reduce supply and demand remains constant, the price rises.
Yeah, and it'll be interesting to see what happens in the year ahead, because
most certainly
we still need to see prices go substantially higher to make that industry profitable.
Well, your point is very well taken there, Kerry. In the U.S., we need $50 a pound for any of our lowest cost ISR producers to come back online. Essentially, no uranium produced in the U.S. in 2020, and the same for 2021. And any new mines, especially conventional uranium mines, underground or even open pit mines, going to need $65, $75, $80 uranium to come back into production.
Right. And I don't know if you caught the news item, but the EU is looking to reclassify natural gas and uranium as green energy components. And there's a big stink brewing there over that. But if they are, in fact, successful at it, which it appears they will be, that could have an impact as well.
Well, it certainly could. And on the other hand, I don't know if you noticed this, Kerry, but at the end of last week, Germany announced shutdown of 3 of its 6 remaining producing nuclear reactors. And so they upped the timeline for shutdown from 2025. They now have only 3 reactors operating. And I guess they're going to live for their energy needs on sun and wind. You've ever been to Germany, most of it's not a especially sunny place. I can't speak for the wind, but no doubt they are setting themselves up for the highest electricity costs in the world going forward.
And a likely major energy crunch or crisis down the road as well. I mean, that's just a huge shut-in of major electrical generation capability for very questionable goals. Or
and not only that, but they are increasingly dependent on Gazprom, the sovereign Russian natural gas company, for pipeline gas through Ukraine or Georgia or wherever it's coming from. And the Russians are toying with them now. They recently reversed flows of nat gas back to Poland. So, so we'll see where that goes.
Yeah. Well, hey, the madness of popular delusions and the madness of crowds, and it's taken hold across the globe. I'd love for Charles Mackay to come back, or actually he had like a great-great-grandson who was updating the book. I'd love to see the next update on it. I'm sure we could think of a few things to put in there.
Yeah, and I don't know if you're aware, but the one of the inventors of mRNA vaccines was recently banned from Twitter for his YouTube podcast on mass program psychosis, which is basically the maddening of crowds.
Oh, for certain. And the YouTube also His interview with Joe Rogan also was pulled off of YouTube as well.
Yeah.
And
Yep.
sign of things to come for sure. So let's look at our ratios here, which I guess tell a story in their own right.
Gold silver ratio increased throughout most of the year, closed at 78.5. Platinum gold ratio was basically flat, closed at 0.53, started the year at 0.56. Platinum to palladium ratio increased from 0.45 to 0.52. But once again, these last two numbers are highly anomalous, with the mean for platinum to gold at around 1.25, the mean for platinum and palladium something on the order of 3.0. Going on to energy, Brent to WTI, basically that arbitrage remains, closed at 1.05. WTI to Henry Hub, basically flat year over year at 20.2. And gold to WTI, if you remember last year, we were setting records month after month after month with that ratio. It is still high at 24.3, but a lot less than at the end of last year at 39, and it actually hit during the beginnings of the pandemic panic. It hit nearly 90 in April of 2020.
I remember it well. Well,
yes,
an interesting year for sure. Maybe things will get back more to normal this coming year, although I have my doubts about it. But
let's hope it's not a new normal, Kerry.
Yeah, well, normal in quotation marks. But,
there you go.
What are you going to do? So we have a major announcement to make here, Mickey.
Well, this is our final show for the monthly market review. I'm kind of moving on to some different things. We've had quite a run, Kerry. I thank you very much for hosting this show. For now, it's 118 episode in exactly 10 years. So we missed 2 times when our respective travel schedules meant we couldn't get it in the first week of the month. But that said, we're going on to other things. The spreadsheet during that time grew from 1 sheet to 8 sheets. Basically, one of the motivating factors is the spreadsheet has gotten so long and it has to be so tiny that you almost need a microscope to see the numbers. So, well, we just decided to pull the plug. But for listeners out there, Kerry and I have agreed to continue with periodic podcasts. And I haven't broached this subject, but perhaps of more political nature, Kerry?
Yeah, well, I'm game.
I know you are.
And hopefully we won't be censored with the rest of them. But, we can always use alternative outlets. We don't have to use big tech's highly censored, highly sanitized outlets, if you will. And Mickey, it's been an honor and a privilege to work with you for the past 10 years, bringing this information out. It's not information that's really widely accessible or obtainable. So I think we've really done a service doing it. And I think that, hey, keep following us. It's not over. It ain't over until the fat lady has sung, and she's mute at the present time. But we will be doing some podcasts along the way, particularly political and resource-based on particular commodities. I've wanted to do one with you for a while, Mickey, about nat gas, because I feel that the market and the public in general don't really understand its significance anymore. There was a time when the energy per BTU between oil and gas was very close together. And then whether it's fracking or whatever caused it, but the BTU price of nat gas sunk, and it sold at a major discount to oil. And that created a lot of conversions in the economy. Now that it appears to be heading higher, I think it needs to be looked at closer, Mickey.
Well, I agree, Kerry, and likewise, thank you so much. It's been my pleasure to do this show. It's not without some regrets that we leave it behind, but gosh, 10 years, a pretty good run, my friend.
Yeah, 10 years in this space where podcasts, YouTube channels come and go almost by the minute. We've stuck to it, and I think we provided something, like I said, that just wasn't out there. And still isn't out there now, other than what we're doing. Yeah, you can look at charts, you can download them and all that, but nobody's really doing it real time. In any event, make sure you go over to Mickey's site, mercenarygeologist.com, sign up for his free newsletter, as well as ours at financialsurvivalnetwork.com. And Mickey's Twitter feed is at mercenarygeo. Ours is at Kerry Lutz. Questions, comments, thanks, just shoot me an email to kl@kerrylutz.com and we answer all. Mickey, good luck, and we'll talk to you again soon.
We will, Kerry, and I look forward to a natural gas program coming up.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.